Hello everyone, it's Kim Hong here. Today I'll be sharing a trade idea with you guys that has a potential profit of 400 pips. Without further ado, let's jump in. So, this trade idea is based off the pound kiwi currency pair, okay? A slim chance of rate hike by the BOE. Okay, so the Bank of England, okay, they'll be holding a monetary policy meeting this Thursday, okay? And for those of you who actually follow the Bank of England's monetary policy closely, okay, previously, okay, back in November, uh, the market was actually expecting a rate hike coming from the central bank. However, they did not deliver. Okay, it was a disappointment, and we see a weakening in the British pound. All right. Nonetheless, okay, the market was actually expecting, well, was actually, yeah, at a higher level of probability. All right, expecting that the central bank will be increasing interest rate this time round during the December's meeting. Okay, why is that the case? All right, prior to the November's meeting, okay, they were specifically Governor Bailey, okay, was actually leading up the market towards a potential rate hike. Okay, one of the major clues that he actually highlighted, or they actually highlighted in the monetary policy meeting minutes, okay, is that you know an interest rate hike can take place even before the end of its quantitative easing program. Okay, so normally, okay, central banks will wait for until the central bank's quantitative easing program has ended, okay, before considering a hike in interest rates. Okay, but in the case of the Bank of England, they have made it clear that we need not wait for QE to end, all right, before increasing interest rates. This is because inflation has been rising very sharply. All right. The most recent inflation data, I think it was a 10-year high data. Okay, 10-year high inflation level. Okay. And I think the central bank actually felt that there's a need, urgent need for them to actually carry on action to tame the inflation level. All right. So, with that, it's fair, right? It's fair that for everyone to expect the Bank of England to actually carry out a rate hike towards the end of the year. So November was the first month, okay, the first month that the market was actually expecting a hike, but then no hike in the end. Hence the disappointment. Hence the British pound weakened. All right, and this time around in December, initially, okay, the market was actually very confident that if it's not November, it is very likely it's going to be December, a hike of interest rate in the December during the December's meeting. Okay, now, however, here comes the new variants of COVID. Okay, the COVID Omicron variant has been discovered, and that actually, I would say, unfortunately, okay, it may actually push back a rate hike this time around during the December's meeting. All right. Moreover, when it comes to COVID, okay, I think it was just earlier today, or was it yesterday? Okay, that there was a news that actually reported that in the United Kingdom, there was actually an increase in the number of Omicron cases. I think it actually doubled, I think, for yesterday, all right, as compared to the previous week. So, yeah, with Omicron cases rising, the Prime Minister of UK, Boris Johnson, he was actually saying something like, he feared a wave of, Omicron cases may come soon. Okay, so with that in place, the real uncertainty coming in, okay, which is the COVID Omicron variant, all right, and its impact on the economy, it is less likely now, okay, that the Bank of England will carry out a rate hike. All right, so I don't know. At the moment, my view is that they may actually postpone this whole rate hike discussion to the next meeting, which is probably going to be in February 2022. All right, so yeah, there goes our rate hike. All right, so with that, if let's say the Bank of England decides to hold interest rate unchanged, okay, at the current rate of 0.10%, then we may actually be seeing a weakening in the British pound. Okay, let's just head over to our chart, okay, to look at the levels, the entry levels, and things like that. All right. Now, as you can see, there are like 4 blue horizontal lines over here. Okay, this is actually a head and shoulder pattern. Okay, for those who actually trade pattern formations. Okay, so this line over here and this line over here, the one on the left, the one on the right, the shorter ones, they indicate the shoulder, and the one in the middle here, it indicates the head, hence head and shoulder pattern. All right. So at the moment, price is trading around the second shoulder, okay, over here. And to be honest, okay, if let's say the Bank of England decides to hold interest rate unchanged at 0.1%, that is going to be a disappointment. All right, that's going to be a disappointment, and it will likely what do you call that, weaken against the New Zealand dollar. Okay, and also keep in mind, all right, when it comes to monetary policy, okay, the New Zealand Central Bank, okay, the RBNZ, is actually many steps ahead of the Bank of England. Okay, first of all, few months ago, the RBNZ has already ended its quantitative easing program. One shot. Okay, the large scale assets purchase program has been ended just like that. Okay. Second thing, they have already increased interest rate by 0.25% twice. Okay, so I think they are standing at around like 0.75% at the moment. Okay, so okay, no doubt during both sessions of rate hikes, the market was actually expecting them to be more bullish, more hawkish. Okay, more hawkish, meaning they were actually expecting the market was actually expecting the central bank, the Reserve Bank of New Zealand, to actually hike interest rate by 0.5%. Okay, however, yeah, they just carry out a 0.25% due to, trying to trying to take things at a slower pace, okay, due to this whole Delta variant, and then now the Omicron variant and things like that, okay, due to the COVID uncertainty, okay, and that actually led to some weakening of the New Zealand dollar as well. But nonetheless, okay, as compared to the Bank of England, right, in terms of monetary policy, they are definitely way ahead of the Bank of England. Okay. And because of that, all right, if the BOE is to just hold interest rate unchanged, then it is likely that we will be seeing a weakening in pound Kiwi. All right. So we'll see how it goes. Okay. Pound Kiwi may actually bounce downwards, okay, from the shoulder, from the second shoulder at the moment. All right. And if it does, then we may actually be seeing a complete formation of the head and shoulder pattern. All right. And in a scenario whereby it breaks below the neckline, which is this long horizontal blue line over here, okay, and it goes further to the 1.933 level, then I'll be looking for a sell entry, okay? And then with that, my stop loss would be at 1.955, which is a 220 pips stop loss, okay? And then my potential take profit level would be at 1.893, which is a 400 pips. Well, all in all, I would say it's around like 1:2, close to 1:2 risk reward. Okay, so this is a healthy risk reward ratio. Okay, that's one thing. Second thing, our profit level is really like, for example, if we were to actually zoom out and take a look at it, we see that our profit level is actually above the, I would say, let me see how many years, but I would say like how many months of low level is this. So the last time pound Kiwi was actually trading below our stop loss level was back in, where is this? January, okay, January 13, all right. So it's pretty much like the lowest level for the year, okay, for 2021, all right. So which is why I put my I placed my take profit level just above the lowest level that was being traded earlier this year. Okay, so will we be waiting for pound Kiwi to trade all the way to 400 pips? Maybe not. All right, it depends. All right, because I may actually decide to choose to close off just before it actually hits the take profit level of 400 pips, depending on what kind of scenarios we are facing, right? Because we may be hearing from the Reserve Bank of New Zealand and things like that. And if they were going to be hawkish, likely going to be hawkish, then I may actually hold my trade longer. Okay, if they were to be more dovish, then I may actually close off the trade for whatever profit I can gather at that time. All right. All in all, I will update you guys again on this whole trade management decision during in our Traders Club platform, FOFIN platform. All right. So with that, 220 pip stop loss, 400 pip TP. I will inform you guys again if it triggers. Okay. So we just have to wait for the Bank of England, okay, to hear what they have to say. All right, before we can see any price movement in pound kiwi. All right. Now also keep in mind that this week is a central bank heavy week. Okay, we'll be hearing from the Bank of England, European Central Bank, okay, and the Federal Reserve. All right. This Thursday, GMT plus 8. Okay, remember GMT plus 8 because in the I think GMT plus, I think in some other time zone is actually on Wednesday, okay, for the FOMC. But for GMT plus 8, specifically the Singapore, Philippines, and the Malaysia time zone, okay, it's all three central banks will be meeting on Thursday, okay, and of course the Swiss National Bank, which I personally expect no change from them, okay. I will update you guys again on what to look out for these three central banks on the next 2 episodes of Currency Call. All right. So with that, I've come to the end of my sharing. Well, I guess that's all I have for you guys today. All right. See you guys in the Currency Call tomorrow. Take care for now. Bye-bye.